Welcome back. You're still tuned in Midcap Radar, and this is our special Midcap Spotlight segment. Techno Electric, that is the stock doing well in trade after it reported a strong set of Q4 numbers. The revenues are higher. Everything actually is looking good here. Vivek, tell us more about this set.
Everything is looking good. But I'll give you a little bit of a context. In terms of FY24, it's slightly underwhelming into what the analyst community was working with. But very interestingly, they had the con call last evening and the guidance there was very, very encouraging. So let's, number one, have a look at the Q4 results itself. So revenues higher by 40.5%, coming in close to the 440 crore mark. Talking about the core EBITDA, up 7.5 times on a year-on-year basis, coming in over the 50 crore mark. Margins very strong, 12.2% versus 2.2% on a year-on-year basis. 1,000 basis points jump as far as margins are concerned. Profitability coming in at 77.5 crore versus 60.8 crore. But again, this looks optically, the growth looks optically slightly lower, but actually the base quarter had an exceptional gain of close to 68 crore. Now, talking about FY24 and how did the company actually pan out? FY24 guidance, the company gave a revenue of close to 1,500 crore, slightly underwhelming against what the analyst community was working with. They were working with a top-line guidance of close to 1,700 crore. They did around 1,300 crore from the EPC business is what they were expecting, and they managed to do close to 1,492 crore. Now, coming to what brokerages are saying, post a very, very encouraging con call that the company did. JM Financials maintains a buy rating on the stock. They have a target price of 1,485 rupees a share. They're saying that the order inflow for FY24 came in very strong at 7,000 crores. Along with that, the orders were largely driven by the order wins that the company saw number one in the transmission segment and also in the smart metering segment. Commentary was very encouraging in terms of what the management said for the data center business as well. Order book very strong, almost 5.5 times FY24 revenue, coming in at the 9,200 crore mark. Order pipeline, the company said, is very strong with orders expected from the T&D segment and also from more orders coming in from the smart metering space. The FGD segment also is doing quite well. And this is something that the analyst committee will look at quite favorably because this particular segment, that is the flue gas desulfurization segment, was muted since the last couple of quarters. This is also quite positive as far as the peer set is concerned. Management maintained its revenue guidance of 2,500 crore for FY25 and 3,500 crore as far as FY26 is concerned. EBITDA margins expected to be around the 13% mark. Now, very interestingly, on the EPS front, the management appears to have gone ahead and revised its guidance upwards to 50 rupees a share from the earlier 45 rupees. Now, if you pull up the intraday stock of the chart of the company, almost 8% higher. And in fact, if you look at a longer time frame of close to 6 months to a year, this particular stock has done exceedingly well.